Alright, for this video we want to go through a sample form 8863 for education credits, and this is going to be for the 2023 tax year. Now in this scenario we're going to have two students. One is claiming the American Opportunity Credit and then the other is claiming the Lifetime Learning Credit. So we'll go through the full 8863 here, and we've also got it as part of the full 1040 for our taxpayers, so we'll cover all the forms and schedules that are required. And then lastly, you've got just one slide here covering some basics on the American Opportunity Credit and the Lifetime Learning Credit, and then more details on the fact pattern. So the American Opportunity Tax Credit is generally the more favorable credit. So this credit covers the first 4 years of post-secondary education. And once you've claimed it 4 times, so for 4 years, you can no longer use it. Now, in order to be claiming this credit, you have to be a student pursuing a degree at least on a half-time basis, right? So you can't just be taking one class a semester, and you can't be non-degree seeking, right? And so you have to be enrolled in a degree program at least half-time in order to claim the American Opportunity Credit. Now, the credit is a maximum of $2,500 per student, and so you can claim this if you have multiple students on a return. Each student gets their own credit, right? And now the maximum amount of the credit that's refundable is 40% of the $2,500. What that means is that if you have a tax return where your tax is reduced to 0, you can still get a tax refund using this credit, but it's limited to 40% of whatever the credit amount is. Now, a full $2,500 credit is going to be allowed if your modified adjusted gross income is $160,000 or less, and this is if your filing status is married filing joint. There's different thresholds for single filers. Now, if it's between 160 and 180, you can still get the credit, but there's going to be a phase out. All right. And then if you have $180,000 or more, you don't get any of the credit at all. So your income really determines how much of this credit you're going to be eligible to claim. Now, for the Lifetime Learning Credit, this credit is available for all years of education. So it's not just the first 4 years of post-secondary. There's also no limit on the number of years you can claim it. So the American Opportunity Credit, only use it 4 times. No limit on the Lifetime Learning Credit, right? You could claim it for 10 years in a row if you wanted to. The other nice thing is the student is not required to be degree seeking. So you don't have to be pursuing a degree. You can just be taking one class as a non-degree seeking student. That's fine. Now, the amount of the credit is going to be 20% of your qualified education costs. And so the credit is a maximum of $2,000 per return. So in other words, if your qualified tuition or other costs are $10,000, $10,000 times 20% is a $2,000 credit. That's the max. If you have $15,000 of qualified education costs, so let's say you've got $15K, the maximum credit, if you were to multiply by 20%, is $3,000, but you can't claim a $3,000 credit. It's capped at $2K. All right. Now, as far as the income levels, it's same as the AOTC, right? You get a full credit if your modified AGI is $160K or less. And if it's between these two, there's a phase out. If it's $180K or more, you're not going to get any credit at all. Now, let's look at the fact pattern, and then we'll take a look at the return. So in this fact pattern, we have Jacob and Susan taxpayer. They are married, filing a joint return, and their combined AGI is $126,145. They have one daughter, Sarah, who is a first-year college student pursuing a degree at a Florida university. Jacob and Susan pay for Sarah's tuition, which is $6,000 for the fall 2023 semester. Now, Susan also has a bachelor's degree in marketing, and she graduated in 1995. She decides in the fall to enroll in some online classes to improve her job skills. She's enrolled as a non-degree seeking student, and she takes 2 online classes. Her total tuition was $1,800 for those 2 classes. So what we're going to try to do here is claim the American Opportunity Credit for Sarah And then we're going to try to get the lifetime learning credit for Susan. All right, so this is their married filing joint 1040. We've got Jacob and Susan taxpayer, married filing joint, and we can see on the dependent section they are claiming Sarah as their dependent. She is a full-time student and under 24, right? And so they can claim her as a dependent. But here in box 4, you'll notice that we are not eligible for the child tax credit because Sarah is not under 17, but they do qualify for the other dependent credit. Now on the income section, we can see their combined wages, some investment income. So their AGI is $126,145. And with the tax imposed, $12,212. That's important because we need to have tax in order to claim some of these credits, right? The American Opportunity Credit is a non-refundable tax credit, but there is that refundable portion of 40%. But in our case here, we're going to have enough tax to be able to absorb all these credits. So if we look at the 8863 here, a couple of things to note. So the first page is kind of like a summary. As it notes here, you have to complete a separate part 3 on page 2 for each student whom you're claiming either of these credits. So they want you to do part 3 first for each student and then come back to page 1 of the 8863. So if we scroll down here, we'll do part 3 first for Sarah, who is the first-year college student at Florida University. So we've got the student name, Sarah taxpayer, her social security number, the name of the educational institution and address. In box 2, it asks, did we receive a 1098-T for 2023? Yes. We did not receive a 1098-T for 2022 because this is the first year she's a student, right? Box 4, we enter the EIN. That's the tax ID number for the university. You can get this information on the 1098-T. Now, lines 23 through 26, they are trying to ask questions to determine whether or not we're eligible for the American Opportunity Tax Credit. Now, if you fail to meet any of these tests, it makes you ineligible for the AOC. All right, so the first question is, has this been claimed for any of the 4 prior tax years? And in our case, no, right? This is the first time we're claiming it. Question 24, was the student enrolled at least half-time at an eligible educational institution seeking a degree, right? In our case, yes, right? Sarah is full-time student enrolled in a degree-seeking program. Question 25, did the student complete the first 4 years of post-secondary education before 2023? This is asking us if we've already got our bachelor's degree, right? So if you've already got a 4-year degree and then you go back and try to get another one, you can't claim the American Opportunity Tax Credit, even though you might not have already used it, right? And so that's what we're going to see in Susan's case with the lifetime learning credit. So in our case, no, right? Sarah's 19 years old. She doesn't already have a bachelor's degree, so first time in college. And then question 26, were you convicted of a felony for possession or distribution of controlled substances? In Sarah's case, no, but if you do have a felony conviction for those reasons, you can't get the American Opportunity Credit, but you can claim the lifetime learning credit. All right, so something to remember there. Now, okay, so we were able to claim the AOC. So now on line 27, it asks us to enter all of our qualified education expenses, but not more than $4,000. In Sarah's case, she had $6,000 of expenses, but we only entered the lesser amount of $4,000. Subtract $2,000 from line 27. Multiply line 28 by 25%. And then on line 30, if line 28 is 0, enter the amount from 27. That's not the case here. Otherwise, you add $2,000 to the $500 on line 29 and then enter the amount here. So we've entered the $2,500 amount here. Skip line 31 because there's no LLC amount for this student. Include the total in part 1, line 1. So this $2,500 is transferred up here. Part 1, line 1, okay? Now we've got to go back and do Susan, so Sarah's mother. So Susan, taxpayer, here is the student. We've got her social security number, where she's going to school for those online classes. In line 2, we did receive a 1098-T. Line 3, we did not receive one for 2022. She wasn't taking any courses last year. Line 4, we've got the EIN for the university. And now we answer the same AOC questions that we did for Sarah. So line 23, has this credit been claimed for any 4 prior years? Well, in Susan's case, she hasn't claimed this in prior years, right? So she answers no to that question, but we'll see that she misses some of the other ones, which is why she's ineligible, right? So remember, you can't claim the American Opportunity Credit if you've already got 4 years of post-secondary education, which is her case, right? She's already got a bachelor's degree in marketing. So question 24, were you enrolled at least half-time, seeking a degree? No, right? So we stop here and we go immediately to line 31 because we can't get the American Opportunity Credit. All right, but if we just look at the other 2 questions for completeness here, right? Have we completed the first 4 years before 2023? And yes, right? So Susan's already got a 4-year degree, so that would make her ineligible for the AOC also. She answers no. She's not doesn't have any felony convictions, but she fails the AOC test for questions 25 and for question 24. Okay, so we skip over the American Opportunity Credit, right? We can't claim that. But what we can claim is potentially the lifetime learning credit. So enter the total qualified education expenses. So we have $1,800 there. And then this amount is reported in Part 2 on line 10. So I go up here, Part 2, line 10, $1,800. All right. So now we've got line 10 completed, and then we've got line 1 completed. So now we can get into parts 1 and 2 and complete the rest of these sections. So part 1, we've got our $2,500 AOC amount, and then we enter the filing status the threshold based on our filing status. So we've got $180,000 here for married filing joint. And then on line 3, we enter our adjusted gross income. So that's our adjusted gross income from page 1 of the return, $126,145. Subtract line 3 from line 2, and we're left with $53,000 and change. Now we enter $20,000 here on line 5 because we're married filing joint. And the question posed here is, if line 4 is equal to or more than 5, enter 1.0. Otherwise, you would divide 4 by 5. So this is trying to calculate that potential phase out. Remember, if you're between $160K and $180 for married filing joint, you have some potential phase out of the credit. In our case, our income is below the thresholds, and so we don't have a phase out. We just multiply the $2,500 by 1.0, and we're left with the $2,500 figure. So the refundable portion of the credit on line 8 asks us to multiply line 7 by 40%, enter the amount here, and on our Form 1040, line 29. So we've got the $1,000, page 2, line 29 is the AOC credit from 8863, line 8. So there's our $1,000 figure for the refundable portion of the American Opportunity Credit. Now we have to figure out how much of the non-refundable credits can happen up here, right? So if we go back to the 8863, line 9 asks us to subtract line 8 from line 7. So we have $1,500 there on line 9. This is the amount of remaining American Opportunity Credit that is non-refundable. So now we're trying to test combination of this and our lifetime learning credit to see how much non-refundable credit we can use. So we've got line 9 completed, we've got line 10 completed. Line 11 asks us to enter the smaller of line 10 or $10,000. Well, the smaller is going to be the $1,800 figure. Line 12, we want to multiply line 11 by 20%. So 1,800 times 20% gives us $360. Now we have to do the same phase-out computation as we did above. $180,000 married filing joint. There's our AGI from page 1. The difference is $53,855, which is greater than the $20,000 for married filing joint. So 1.0 is the same factor here. So line 18, we multiply line 12, 360 by line 17, and gives us $360. So we enter the amount here and on line 1 of the credit limit worksheet. All right, so if we go look at the credit limit worksheet here, so the credit limit worksheet has two figures, right? We've got the $360 that has to be carried over, and we've got the $1,500 from line 9, right? So it asks us to enter here and on line 2 of the credit limit worksheet. So we're carrying over $1,500 and $360 to the credit limit worksheet. All right, so here we have our credit limit worksheet. Now, the credit limit worksheet is going to test our non-refundable credits against the total amount of tax that we have. So the total amount of tax that we have from line 18 is $12,000, so $12,212, right? So we've got on line 7, we have the $360 carried over from line 18 of the 8863. So we want to subtract line 6 from line 5, which leaves us with $12,212. Enter the smaller of line 7 or line 8. So the smaller of those two is going to be $360. All right. So this is the total non-refundable lifetime learning credit that we can claim. Now we have to test whether we still have some tax left over to claim the American Opportunity Tax Credit. So we have that $1,500 transferred over from the 8863, line 9. Subtract line 9 from line 8. So subtract 360 from 12,212 gives us 11,852. Enter the smaller of line 10 or line 11. The smaller of these two is 1,500. So this is the non-refundable American Opportunity Credit. Now on line 13, we add lines 9 and line 12, and we get $1,860. So this is the amount of credit that is entered on the 8863, line 19. So if I go back to 8863, scroll down to line 19, there's our $1,860 credit amount. So this amount is then transferred over to Schedule 3, line 3. So Schedule 3 of our return is where we report additional credits and payments. We can see here in Part 1, line 3, this is a non-refundable credit. Education credits from 8863, line 19, $1,860. All right, and so ultimately that makes its way back to line 20 up here. So we can see the amounts from Schedule 3, $1,860. So we've got $12,212 of tax. We're able to get a non-refundable credit of $1,860, and then a American Opportunity refundable credit of $1,000. All right, so so in all, if we look at the tax benefit that we saw here, we've got a $1,000 refundable credit. We've got $1,860 up there that was used. So all in, the total amount of credits that we're getting on the 8863 are $2,860 of tax credits on all of our tuition. So if you figure $2,860 of credits on how much tuition we paid. So $6,000 plus $1,800. So $7,800 of tuition paid for the family during the year, and they got a benefit of $2,860 in tax credits. All right, so that covers it for this tutorial. I hope that was helpful. Any other questions on the 8863, feel free to leave a comment below, and I look forward to seeing you again on the next video. Thank you.